The market is currently closed, so we must look at the last closing price for Ondas Holdings, Inc., ticker symbol ONDS, which was $6.415 per share on Thursday, October 30th, 2025, representing a decline of negative 4.96% or negative $0.335 from the previous close. That nearly 5% drop on significant volume is precisely the sort of price action that makes a stock like ONDS feel like a house of cards to the average viewer, especially when they've seen the monumental but volatile run-up it has had over the past year. The expectation here is that the high-flying excitement is fading, giving way to the harsh reality of its deeply unprofitable financials. But the reality is far more complex than a single day's profit-taking. What you missed in the daily noise is the relentless, aggressive strategic layering the company is undertaking in the defense and autonomous systems space. Just in the last month, the company announced the acquisition of a controlling interest in Insight Intelligent Sensors, a developer of AI-driven electro-optical sensing systems, hot on the heels of announcing a controlling stake in 4M Defense, which focuses on smart demining capabilities and subsurface robotics. The market's immediate reaction is short-term fatigue and dilution fears from a massive $425 million stock and warrant offering. But the deeper context is that Ondas is spending that capital to fundamentally reshape and fortify its business model at a breakneck pace, specifically targeting high-margin government and defense contracts. This frantic, calculated spending spree to become a multi-domain autonomous intelligence provider is the real story, and it directly challenges the simple narrative that Ondas is merely another drone or radio communications company grappling with a lack of consistent profitability. The general belief about Ondas Holdings is that it's a small-cap tech stock that has experienced explosive growth fueled by speculative buzz around its two main business segments: Ondas Autonomous Systems, OAS, which includes drone platforms and aerial intelligence, and Ondas Networks, which focuses on private wireless networks for mission-critical industrial markets, primarily rail. The excitement stems from significant recent contract wins, particularly in the defense sector with its drone platforms like the Iron Drone Raider and the high-profile strategic partnerships, including one with Palantir for AI integration. This surge of interest has created a stock price that has, at times, felt disconnected from its core financials, trading at elevated multiples like a price-to-sales ratio over 40x. This is where the tension lies. Investors expect the high-growth story to continue, but the reality is a business model that is capital-intensive and consistently burns cash, exemplified by a net loss of over $10 million in the most recent quarter. The contrarian take, which forces a rethink, is that this recent flurry of strategic M&A and capital raising is not a sign of desperation, but a calculated pivot to create a defensible, integrated technology stack. They are essentially buying their way to a more vertically integrated, high barrier-to-entry defense and critical infrastructure technology player, leveraging their newfound elevated stock valuation to secure the components like AI-driven sensing and subsurface robotics that truly differentiate their platform from a mere drone manufacturer. The success or failure of Ondas will hinge not on their next quarterly loss, but on the speed and efficacy of integrating these recent acquisitions into their core offerings to capture large-scale, long-term government contracts. This is the complex dynamic that makes ONDS such a high-stakes play in the current market environment. Looking at the recent stock movement, the volatility is extraordinary, which is a key characteristic of the stock. After rallying over 700% in the preceding year, the stock has recently seen significant daily swings. The $6.415 close was on high trading volume, nearly 3 times its average daily volume, suggesting a notable level of institutional or large-scale retail activity in distributing shares. This recent downward pressure, even in the face of positive-sounding acquisition news, often signals a couple of things. First, that short-term speculators are taking profits after the massive run-up, which is a natural technical correction. Secondly, the market is reacting to the financial mechanics of their latest stock offering. When a company issues a large number of new shares, it dilutes the existing shareholders' ownership, putting downward pressure on the stock price in the short term, regardless of how strategically beneficial the capital may be. This is a common hurdle for aggressive growth companies that need constant capital to fund expansion and M&A. Institutional activity, however, tells a different story over the midterm. The latest filings show a significant increase in institutional ownership in the preceding quarter, with large firms like Hood River Capital Management and Vanguard Group Inc. dramatically increasing their positions. This suggests that while the retail and short-term traders might be bailing out on dilution fears or profit-taking, the long-term, sophisticated money sees the strategic value being built, viewing the temporary dip as a buying opportunity. This is a classic expectation versus reality disconnect. The immediate reality of a falling stock price contrasts sharply with the expectation of a stronger, more valued company held by institutional investors. Sector momentum is strongly in Ondas's favor, which is crucial for balancing the recent stock pressure. They operate at the intersection of private wireless communications for critical infrastructure and autonomous systems, specifically drones for defense and industrial applications. Both of these sectors are experiencing massive tailwinds, driven by global defense needs and the push for automation in major utilities and rail lines. Ondas Networks is positioned to capitalize on the modernization of Class I railroads in North America with its proprietary wireless technology, a multi-year, multi-billion-dollar opportunity. On the OAS side, the combination of advanced military-grade drone hardware and the recently added AI-driven sensing capabilities from acquisitions like Insight Intelligent Sensors places them squarely in the lucrative defense technology sector, which is currently seeing increased government spending and faster procurement cycles globally. This sector-level strength provides a powerful foundation that makes the day-to-day stock swings feel less significant in the grand scheme. The macroeconomic pressures, however, are a double-edged sword. While global instability drives defense spending, a positive for OAS, the higher interest rate environment makes it far more costly for an unprofitable company like Ondas to continually raise the capital it needs to maintain this aggressive expansion pace. The fact they were able to complete a substantial capital raise is an indicator of strong conviction from certain investors, but the price they paid for that capital in terms of dilution remains a significant headwind. To properly understand the story, we need a concise look at what the company actually does. Ondas Holdings operates through two main segments. Ondas Networks provides proprietary, software-defined radio technology that enables high-speed, reliable, and secure private wireless connectivity for mission-critical industrial applications, such as the North American Rail Network. This is essentially the backbone communication technology for the Industrial Internet of Things, or IIoT. Ondas Autonomous Systems, OAS, which is now the primary growth driver, is focused on aerial and ground drone systems intelligence and autonomy. This segment includes Airobotics and American Robotics, which provide autonomous drone-in-a-box solutions for industrial monitoring and now, with the recent acquisitions, advanced defense-oriented platforms. The key distinction in their business model is the focus on autonomy and intelligence over just hardware manufacturing. They are selling a system, a combination of aerial platforms, proprietary communications, and AI-driven data analysis for mission-critical tasks, which allows them to command a premium over simpler drone companies. Older reports show that the Ondas Network segment struggled for years to gain traction, with consistent losses, but the pivot and expansion into the autonomous systems market via OAS has completely changed the company's trajectory and valuation narrative, driving the stock's outperformance against the broader market. The Q2 2025 revenue surge of over 500% year-over-year was almost entirely attributable to the OAS segment, solidifying this new direction. Now, let's shift into the future outlook, always keeping that expectation versus reality framework front and center. The market's expectation is that Ondas will either deliver on a massive defense contract that validates its $2.3 billion market cap, or it will continue diluting shareholders until it burns out. The reality is that the outlook is tied to several specific high-stakes catalysts. One potential positive scenario is the full commercialization and adoption of their drone-in-a-box solutions across major industrial sites, particularly as part of rail infrastructure modernization, which aligns perfectly with their existing Ondas Networks clients. If they can cross-sell their OAS platform into the rail and utility markets, their total addressable market expands dramatically, and their high gross margins should begin to translate into a clearer path to profitability. Another major catalyst is the integration of the recently acquired